Hey, it's Steve Zelenardo here with Remax Experts, Zelenardo Associates. We're back in Toronto, and we're going to give you a quick update on the market. Current inventory right now, we're at 10,110 units. Similar to last week. Last week, we broke the 10,000 mark. We're just up a little bit here, 100 plus more units than last week, and then sales are at 933, which are really good. That's pretty much it. The big conversation and everybody that I talk to, specifically friends, family members, investors, clients, whatever it is the interest rates. Steve, what do you think about the interest rates? You think they're going to keep escalating them higher? No, I don't think so. We're at I think 4.5% now. I think that's where they need to be. Ultimately, the damage has already been done. I mean, you're getting to a 5-year fix at 5.6%. Let's say the posted bank rates, and then you have to qualify 2% higher than that. So you're at 7.5%, let's say. So that's obviously anybody buying a house right now is definitely deserve to buy those units, because ultimately look at the screening process they have to go through. That's affordability, which is great. But at the same time, I don't think they're going to change that. I think it's 4.5%. What we're looking at, to be honest, as a group here is the lag time. Remember, like, real estate's not as instantaneous as the stock market. It's not like when there's a shift today, tomorrow there's an effect, or the same day. The real estate's it's like I always mention it, or a quick analogy, that it's a big cruise ship. It takes a while to turn and move, and that's exactly the same way the real estate market moves. So we know that the rates went from 0 to here. Ultimately, we knew people have mortgage up to here, and affordability is always an issue. So it's basically a lag time now to see how the debt's being managed, how they're being held, if people got to sell off. So there is a lag time right now. We're starting to see some weaknesses. Talking to people that we know that are in the higher ups, they have a lot of invested big businesses and stuff like that. And when they talk to people that are construction financiers and like billion-dollar companies, and also developers and stuff like that, it's becoming not unmanageable, let's call it, because in the construction financing era, or the industry, that people are not paying them back their debts, because ultimately they can't sell sell the product that they built in order to pay off this construction loan. So they're pushing back, and these banks clearly, a lot of the money's in-house, but a lot of it's lent from other banks, right? They keep lending to make points off the money, so they got to pay back somebody at some point. So they're having stress there, and this is a very high level. And then if you get into like the developers, they're not selling much, let's face it, especially new construction. And it's not even, if they lowered their price, they probably would. But they can't, because of the land cost, the development costs, the construction costs. Every sort of cost associated is geared to where these prices are now. So there's going to have to be a correction. And it's unfortunate, right? If you're in a construction project and it's near completion, you can't get it sold at yesterday's prices. What do? Do you hold on to it? Do you rent it? Is it just one unit, or is it 100 units? So there's a lot of stuff, a lot of uncertainties going into the market. So this is where we are right now. We're waiting for the lag time. We're going to sit on our hands, even though I'm like just anxious to buy and keep doing things, but I just got to keep telling myself that you got to stick to the plan. Like, you can't verge off of what is going on here. There's a lag time, even though like Jan, Feb, even into March, huge rush of purchasing. And we're finding it between, well, mind you, we're selling everything. We sold from $400,000 to $3.5 to $4 million. So it's like everything is moving, but we're finding like the hot spot is like that 800 to 1.2 million market, where a lot of buyers are coming out, and these are getting a lot of pressure on, where there's bidding wars, and now not only bidding wars. So bidding wars, we're taking it to market value. We're kind of, me and Mike were monitoring a few of these sales, because we have clients that we have a listing in the same area, and they're not selling at today's market value. They're selling at 2022 pricing, which is, let's say, for a single family detached single car garage in like Patterson community. We're selling for 1.2 million in this market. The height, they're like 1.4 to 1.6. Now they're selling at 1.4 and change. So it's like getting right back to that 22 pricing. So interesting stuff. But again, we're not going to do anything. We're sitting tight. Obviously, it's still a good time to unload, which I did personally, and I'm thinking to see if we can unload a few more things prior to the year end. Let's see what happens with that. Kind of gauging with usually I have a great article to read and kind of go through. It's just, everything is just up and down. Like, there's like, this article talks about the market being up 77%, but it's down 47 since last year. Calgary market sinks, then it's going to talk about that, how it went back up, and then it's then even if down here you get into articles like home prices rose for first time in 11 months, which is true for sure. Um, Canada home prices down nearly 13%. Um, it's nonstop, like just continuously, like you don't know where to pinpoint. This is I would imagine people printing articles and stuff like that, they have to obviously give you some sort of news, but there's no clear indication. This is why we're calling it the lag time, and this is what a real term in real estate, where it's like you got to wait and to see what happens and then ultimately make decisions. So we're going to be sitting on our hands a little while longer. I think probably to the end of the year I won't do anything for sure. And yeah, we're even in the States, we're doing some stuff there. Got a few properties to close on, and then ultimately we're looking at a commercial unit to actually open up, like physically a nice office there. We have 4 or 5 office spaces, a boardroom and all that, because currently right now we're leasing in a space, and leasing is not always a good idea. Like, it's a good idea to break into the country. It's nice because I'm not fully committed, but ultimately we see the future there, so we're gonna start looking into something commercial. And problem is, there's nothing there to buy, in the sense that everything gets bought right away. So it is what it is. We'll figure it out one day at a time. But that's pretty much it, guys. If you have any questions, always reach out. 647-962-4372. Ciao.